This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Western Australia, the country's top resource exporting state, is banking on growing demand for liquefied natural gas, LNG, and the metals needed for the green energy transition to sustain its economy in the coming years, the state's mining minister said. The state's LNG output and revenue will rise to a record this year as production at key export facility Gorgon has stabilized, Bill Johnston told Reuters on the sidelines of Singapore International Energy Week. Spot LNG prices have soared since the Ukraine war broke out in February, with Europe turning to LNG imports following cuts to piped Russian gas supplies.
Oil prices rose by more than $1 a barrel on Wednesday on supply concerns and a weaker dollar, though U.S. stockpile data capped gains. Brent crude futures for December were up $1.11, or 1.19%, at $94.63 a barrel by 13:59 GMT. U.S. West Texas Intermediate, WTI, crude futures for December rose $1.39, or 1.63%, to $86.71. A weaker U.S. dollar sent a bullish signal, making oil cheaper for holders of other currencies. Ongoing supply constraints added further support, with the head of the International Energy Agency highlighting the first truly global energy crisis.
Moving on to the top news in the energy sector.
Oregon's cap and trade program, Maryland's net zero emissions targets, and Arizona's solar subsidies all hang in the balance in upcoming midterm elections, and their fate could have an effect on U.S. climate performance. States have taken the lead on climate in recent years in the absence of federal policy. Numerous states have already pledged net zero greenhouse gas emissions by 2050, and investors concerned with environmental, social and governance, ESG, issues have purchased municipal bonds to fund those efforts. But voters in some states are now worried about rising energy costs, while other states must reckon with poor air quality and higher emissions.
The World Bank on Wednesday said it expects energy prices to decline by 11% in 2023 after this year's 60% surge following Russia's invasion of Ukraine, although slower global growth and COVID restrictions in China could lead to a deeper fall. The bank in its latest commodity markets outlook projected a Brent crude average price of $92 a barrel in 2023, easing to $80 in 2024 but well above the 5-year average of $60. It said Russia's oil exports could drop by as much as 2 million barrels per day due to a European Union embargo on Russian oil and gas products, coupled with restrictions on insurance and shipping, that are take effect on December 5. Next, we have the top news in metal markets. Steel demand in the European Union is expected to erode by 3.5% this year and fall 1.9% in 2023, hit by soaring energy prices and a looming recession, industry group Eurofer said on Wednesday. This is the second time this year the European Steel Association has downgraded its forecast for apparent steel demand, which measures output of steel producers plus net imports minus net exports. In February, the group said expected steel demand to rise by 3.2% in 2022, but that was revised in August to a 1.7% decline in demand.
Industrial metals prices rose on Wednesday as hopes for a slower pace of U.S. interest rate rises boosted global stock markets and weakened the dollar, making dollar-priced metals cheaper for buyers with other currencies. Weak U.S. economic data reinforced a sense among investors that the Federal Reserve will tighten policy less aggressively and therefore inflict less damage on the economy and demand for commodities. In China, the biggest metals consumer, the yuan strengthened by more than 1% against the dollar as the change in U.S. interest rate expectations was joined by news that state-owned banks were selling dollars to stabilize the currency.
We will now look at the top news in the agricultural sector.
Russian President Vladimir Putin is likely to use the possible extension of the UN-brokered Black Sea grain deal as a way to gain leverage and dominate next month's G20 summit in Indonesia, a European diplomat briefed on the grain talks told Reuters. Ahead of the November 19 expiry of the grain deal, which allows Ukrainian Black Sea grain exports, Russian officials have repeatedly said that there are serious problems with it. but a European diplomat who asked not to be identified because of the sensitivity of the discussion said that Putin will attend the G20 summit on the resort island of Bali that begins on November 15th.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.